Money Vikings, Money Viking G here, and I want to provide a good one for you today, a special one for you today. I want to talk a little bit about the market crash that we're experiencing at the moment and sort of what started it and how, as a middle-class wealth builder, we may want to respond or react to that situation or not react in many cases. So let's get right into it. So the increased threat of increased tariff wars is definitely rattling things as of the moment. There also seems to be some sort of turbulence going on in terms of rare earth supply chains. For those who don't know, rare earths are those minerals. Those rare earth minerals are those components of modern life in a lot of ways. A lot of them go into how the cell phones and lots of various technologies work. They're required to make those technologies work, which is quite fascinating. It almost seems like a sci-fi movie, like Dune and the Spice or something. But sometimes truth is stranger than fiction, and that's definitely the case here with the rare earths. So there was something with the rattling of things with the rare earths. And there is, increased discussion of increased tariff wars that continue to be ratcheted up. In addition to you have a government shutdown situation that over time will start to clog things up in terms of the overall system. It will start to affect the economy at some point. It always takes a little while. Sometimes it takes a few days on these things, or even a few weeks. But as you get day in and day out, you start getting, lots of disgruntled workers. You start to get lots of things sort of just being gummed up in the system, and that will extend at some point to the broader economy. Business and government do work together in many ways, and so when you start, clogging up the gears of one. Anyway, not a political channel, whatever. I'm just saying, what will we do as middle-class wealth builders? That's the big question, right? And so if you haven't already done so, one of the big things in terms of market crashes is really not to react. You need to think long-term in terms of turbulence. You need to sometimes look at these opportunities as buying opportunities. If you are dollar cost averaging, again, it's another opportunity to buy assets at a little bit of a discount. So that's something to keep in mind as things kind of, bump along. If you had not done so, again, I'd go back to checking out some of our earlier videos or content about strategically diversified portfolios. And some of these portfolios were, the original foundation were some of the Ray Dalio portfolios, where he would talk about your sort of exposure to the S&P 500 versus your exposure to bonds versus your exposure to having some cash. And also, he always actually had gold in there, which is very interesting as gold hits an all-time high. I think in recent years, he also I put gold and Bitcoin in the same category, and I put them in the same category of stores of value. The ability to weather storms is the idea. Although it is ironic, Bitcoin can act a little bit. Sometimes it was tied to the NASDAQ. It was tied to tech stocks in a lot of ways. But I imagine we may see a decoupling of that over the years as more and more capital goes into Bitcoin, and it actually stabilizes in some way. In a lot of ways, it has stabilized. I mean, it's been over 100,000 for quite a while now. So that's the new normal, which sounds crazy to those of us who started, when it was 15, 17,000. So you have a situation where 100,000 is the sort of baseline new normal, and it certainly hasn't broken down to that point. So I still think the midterm and long-term bull case for Bitcoin exists as part of a strategically diversified portfolio. So I'm not changing much. I'm probably, maybe it's time to, maybe beefing up an emergency fund if you're feeling like turbulence or the economy is really on shaky ground. I think the other thing that's going to still be a drag is that the cost of living is really high for people. And I don't see any signs of that changing. The politicians will tell you it will, but we don't really know. So, I'm not seeing signs of inflation or the cost of living coming down in any aspect. Maybe housing has come down a little bit, but you're going to have interest rates drop, and it's just going to be as expensive as ever. Food is pretty expensive, gas is pretty expensive. it just is what it is. You know, those prices really did get stuck at the levels that they reached, and in fact they continue to go up. They're not going up probably at the same rate as they used to. So this is not about doom and gloom, but it's about, let's be realistic. Definitely need to be cutting costs where we can. Definitely need to be pulling back on some of the extra stuff as much as possible. Put those inflation defense systems in place. All that stuff still needs to be occurring. We're not in some golden era where people are really feeling very comfortable about everything. Now, asset prices have gone up, the stock market's gone up, but you have to sell. You have to sell those assets in order to reap those rewards. And a lot of times those are part of people's long-term retirement plans. Those are things that people want to be holding on to create future passive income machines. So at these times, I would just go back to fundamentals and get your psychological game in check. What does that mean? That means, just have a long view of things. Don't react to markets up and down. Just as fast as it drops, it skyrockets back up these days. So, volatility is there at this time. Check out some of Jerry's option strategies, the covered calls, the synthetic dividends. That's all good stuff. So, hey, thanks for watching. Hang in there, folks. Praying for you. God bless you. God bless your family, and see you on the next one.